One deal, one stock, one massive 23% surge. Today, the AI wars went nuclear, sending shockwaves through the Nasdaq while the rest of the market stumbled. We'll tell you which company just changed the game, and what it means for your portfolio. Hello, and welcome to EPK Capital's daily market briefing for Tuesday, October 7, 2025. In the next few minutes, we will dissect the day's most significant market movements, delve into the macroeconomic data shaping investor sentiment, and touch upon the political and digital currency landscapes. Let's begin with a snapshot of where the major indices closed today. Global Market Roundup. It was a mixed day across the global markets. In the United States, the S&P 500 continued its upward trend, closing at 6,740.28, a gain of 0.36%. The tech-heavy Nasdaq Composite also had a positive session, finishing at 22,941.67, up by 0.71%. However, the Dow Jones Industrial Average bucked the trend, slipping slightly by 0.14% to close at 46,694.97. Across the Atlantic, European markets were largely subdued. The Pan-European Stoxx 600 ended the day nearly flat, with a minor dip of 0.04% to 570.24. Over in Asia, it was a different story, with significant gains in some markets. Japan's Nikkei 225 had a stellar day, surging on political optimism to close at 48,098, up 0.3%. South Korea's KOSPI also saw a significant jump of 2.7% to 3,549. In China, the Shanghai Composite and Shenzhen Component rose by 0.52% and 0.35% respectively. However, Hong Kong's Hang Seng Index experienced a decline, falling to around 26,957. Now that we have the numbers, let's explore the stories behind them. In-depth market analysis. U.S. markets, our tale of two trends. In the United States, the story of the day was the continued divergence between the tech sector and the broader industrial market. The Nasdaq's strength was largely fueled by the ongoing excitement surrounding artificial intelligence. A landmark deal between Advanced Micro Devices, AMD, and OpenAI sent AMD stock soaring by an incredible 23.7%. The agreement could see OpenAI acquire a significant stake in the chipmaker, signaling a major power play in the AI space. This had a ripple effect, boosting the entire semiconductor index by nearly 3%. However, not all tech giants shared in the gains. Nvidia, a key player in the AI chip market, saw its stock dip by 1.1%, suggesting investors may be reallocating capital within the sector in light of the AMD OpenAI news. Another notable gainer was Tesla, which rose over 5% in anticipation of a product launch event. The electric vehicle maker is expected to unveil a more affordable version of its popular Model Y. On the other side of the spectrum, the Dow's slight decline indicates some profit-taking and a rotation out of more traditional industrial and financial stocks. The backdrop to this is a complex macroeconomic picture, which we will delve into shortly. A look at Europe. Political tremors and economic woes. European markets traded cautiously, with investors keeping a close eye on political developments in France and worrying economic data from Germany. The resignation of French Prime Minister Le Cornu has created a degree of political uncertainty, weighing on the euro and dampening investor sentiment. The euro has underperformed against other major currencies as a result. Adding to the concerns was the latest data on German factory orders. For the fourth consecutive month, orders unexpectedly fell, this time by 0.8% in August. This decline is largely attributed to uncertainty surrounding tariffs, which has impacted international demand for German goods. While domestic orders show a surprising increase of 4.7%, the overall trend points to a fragile recovery for Europe's largest economy. The automotive and pharmaceutical sectors were particularly hard hit, with orders falling by 6.4% and 13.5% respectively. Asian markets, the Sinonomics effect. The standout performer in Asia was Japan, where the Nikkei 225 has been on a tear. The catalyst for this surge is the election of Sane Takaichi as the new leader of the ruling Liberal Democratic Party, making her poised to become the country's next prime minister. Investors are optimistic that Takaichi will implement a policy of aggressive fiscal stimulus and monetary easing, a strategy being dubbed Sananomics in a nod to the Abenomics of the late Prime Minister Shinzo Abe. This has led to a rally in Japanese stocks and a sharp fall in the yen, which is nearing the 150 mark against the US dollar. The prospect of a more accommodative Bank of Japan is seen as a positive for Japanese exporters, hence the exuberance in the stock market. However, there are some words of caution. The new LDP Secretary General has stated that fiscal discipline will not be completely ignored, and there are mixed messages from Takaichi's economic advisors about the future of the central bank's policies. Macroeconomic landscape. Now, let's turn our attention to the broader economic forces at play. US government shutdown and trade data. A significant headwind for the US market is the ongoing government shutdown, which has now entered its second week. While the immediate market impact has been somewhat muted, a prolonged shutdown could start to erode consumer and business confidence. On the data front, the next release of the US International Trade in Goods and Services report is scheduled for today, October 7th. The previous report for July showed a widening of the trade deficit to $78.3 billion. This is a key indicator of the health of the US economy and its trade relationships, and the upcoming figures will be closely watched for any signs of improvement or deterioration. Global growth concerns. Looking at the global economy more broadly, recent reports from the World Bank and Morgan Stanley paint a picture of a widespread growth slowdown in 2025. The primary drivers of this slowdown are identified as rising trade barriers and heightened policy uncertainty. Global growth is now expected to weaken to around 2.3% to 2.9% in 2025, a significant downgrade from previous forecasts. The outlook for emerging markets is particularly challenging, with growth forecasts being revised downwards across all regions. In the US, economic growth is projected to slow to 1.5% this year, with inflation expected to peak in the third quarter as the effects of tariffs are passed on to consumers. China is also facing a bumpy road ahead, with its economy forecast to grow by 4.5% in 2025. The government's support measures are unlikely to fully offset the negative impact of US tariffs, and the country continues to grapple with a weak housing sector and deflationary pressures. The International Monetary Fund, IMF, also released a chapter of its Global Financial Stability Report today, focusing on the changing landscape of emerging market sovereign debt. The report highlights the growing vulnerabilities of these markets to global shocks and the reduced appetite from global investors. Political commentary. In the political arena, the most significant market-moving developments are centered around the new leadership in Japan. As we've discussed, the prospect of Sananomics is having a profound impact on the Japanese stock market and the yen. In a recent statement, the new LDP Secretary General Suzuki attempted to temper expectations of unchecked spending, emphasizing that even proponents of fiscal expansion see the need for some level of fiscal discipline. Meanwhile, a former Bank of Japan board member commented that a yen weaker than 150 to the dollar could lead to elevated inflation. He also suggested that there is no rush to change the joint statement between the government and the Bank of Japan on monetary policy. These comments may help to ease some concerns about a radical dovish shift at the central bank. The crypto corner. Finally, let's take a look at the world of digital currencies, which has been a hive of activity. Bitcoin's new all-time high. Bitcoin has been the star of the show, surging to a new all-time high of over $126,000. As of today, it is trading around $124,400, up 1.14%. The broader crypto market is also in the green, with Ethereum trading at $4,580, a gain of 1.03%. This bullish momentum is being driven by several factors. There's a growing sense of October, a seasonal trend where cryptocurrency markets tend to perform well in October. Weaker US labor data has also raised hopes of an interest rate cut from the Federal Reserve, which is generally seen as positive for risk assets like Bitcoin. Institutional adoption and ETF news. The institutional adoption of cryptocurrencies continues to be a major theme. The iShares Bitcoin ETF, IBIT, is on the fast track to reaching $100 billion in assets under management, a milestone it is expected to achieve in record time. In other ETF news, Grayscale's newly launched Ethereum staking ETF has seen strong early demand, staking 32,000 ETH, worth approximately $150 million, on its first day. This highlights the growing institutional appetite for yield-generating opportunities within the crypto space. However, it's not all smooth sailing. The SEC has delayed the approval of spot ETFs for XRP and Solana, citing the recent lockdown as a reason. Despite this, investors remain hopeful that approvals could come later this month. Renowned gold bug Peter Schiff has offered a word of caution to Bitcoin enthusiasts. He points out that when measured in gold, Bitcoin is still about 15% below its record high, suggesting that the current surge could be a bear market rally. Analysts are now eyeing the $150,000 level as the next major target for Bitcoin, with some suggesting that any dips below $121,000 could represent a good buying opportunity. Looking ahead. As we look to tomorrow, investors will be digesting today's trade data and keeping a close watch on any further political developments in Europe and Japan. The ongoing US government shutdown will also remain a key focus. In the tech sector, all eyes will be on Tesla's product launch event to see if it can live up to the market's high expectations. Conclusion. To summarize, October 7, 2025, was a day of continued strength for the tech-driven Nasdaq, a slight pullback for the Dow, and a mixed performance across the globe. The narrative was shaped by the ongoing AI boom, political shifts in Japan, and persistent concerns about global economic growth. The cryptocurrency market, meanwhile, continues to forge its own path, with Bitcoin reaching new heights and institutional interest showing no signs of waning. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice. For your personal financial advice, kindly get in touch with us on details in description, or you can connect with your financial advisor. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel.